Quick update on Tesla. Stock has basically just been sitting sideways for the past couple of days. I'm still holding my 2026 116 $340 call options. Nothing has changed as far as my thesis and my analysis. Basically, everything that we have been expecting and the levels that we have been watching are going according to plan. We know that we have this wedge in place. We know that there is a thick area of volume on this gray volume profile right between $340 to $337. And we know that when we're trading at a thick level like that this is going to act as a key resistance and a key support. That's why we've basically been banging around this resistance of 340 and bouncing between $300 with our point of control as this red line here at $320, or essentially the highest area of volume that has been traded. So as long as we're going to continue to hold in those levels, we're going to continue to compress. Now, if we're actually able to hold over $340 and sweep that level, that's where our first target of $400 is going to come into play, because we have a very thin area of volume on the volume profile, and that next target would be right up to that previous thick area of volume at 400. From there, if that level sweeps, that is where we will move up into the $450 to $500 target that we've talked about by end of 2025, which best case could actually probably happen by October. Now, as far as my worst case scenario, I think that price could come back one more time to $320, worst case $310. And that's why when we entered this position, we decided to only go in with about 70 to 80% of our planned position size, because my goal is that if price pulls back to $320, then I'm going to take the capital that I have left over and average down on that position, because the chance is still pretty high that we actually pull back to that support level. Now, the key thing here is that the average down was premeditated. Something that I see way too many people do when they're trading is average down out of desperation and not average down because they planned it previously. Anytime I take a trade, I take the max amount of capital that I'm willing to trade with, then decide how I'm going to get into the position. If I'm going to buy all at once, if I'm going to average down, and exactly where those average down points are going to be. Now, in the case with Tesla, our plan was to enter here and then average down at 320 and set a stop loss if we close under 300. Not just tap 300, but like fully break and hold under $300. And so far, nothing about our thesis has changed, so we're not going to do anything different. Another thing I also need you to remember is that this is one of like 54 stocks that I am currently holding within our fund and currently trading. So if Tesla doesn't end up working out, much like not all of my trades do end up working out, that is not the end of the world. It is one of many. And one of the most important things that you guys need to understand and remember is position sizing. There are too many people where the only holdings that they have in their account and the only stock that they trade is Tesla. And if you really believe in the company that much, then go ahead and do that. But it's not something that I would ever do. Because personally, what I'm trading is not based off of a company. It's based off of a system. It's based off of my smart money system. And so anytime anything is setting up within a smart money zone or bouncing off of a smart money zone, then I am going to take that position and I'm going to dispense it equally across my fund. For instance, if we just look at some of the top winners that we've had, SoundHound were up about 55%, came down to our smart money zone, bounced to perfection. Reddit pulled back into our smart money zone, bounced to perfection. Norwegian Cruise Lines pulled back into our smart money zone, bounced to perfection, and so on. And so for me, I'm not worried about Tesla. Like if Tesla was not meeting my criteria, I just wouldn't trade it. I wouldn't force myself to trade it because I love the company or something like that. I'm trading it because it's meeting my criteria. And of course, criteria doesn't always hold. I mean, for instance, if we look at TTD or Sweetgreens, these are my two biggest losers right now. TTD initially bounced off of Smart Money Zone, but sold off drastically last week. Sweetgreens was holding my Smart Money Zone and is now coming really close to my stop loss. So it's not like this system is foolproof and works every time, but we're trading a system and diversifying our account across all of these stocks that are meeting our criteria, not just trading one stock. Now, if you want to learn how to draw these smart money zones and learn our smart money zone system, Our 11 course masterclass series is completely free and it's down in the description. You will learn all of our proprietary indicators, my exact trading system, and we just put out a brand new course going over the volume profile, which is this indicator over here showing you where buyers and sellers have stepped in at over the past couple of years. The link to all of that will be down in the description.